or basically this equals this, right? My hash rate equals Bitcoin over here. But if you look at kind of hash rate in and of itself, it has its own value. And so what we're seeing right now is a lot of the move and trying to quantify that value. And there's a bunch of different ways to do so, but there's also financial options that you can, or I guess products that you can iterate on and develop on top of that. So right now on Binance Pool, yeah, you have the ability to resell hash rate instead of just kind of transferring over Bitcoin to the exchange side and using a lot of our product stack to add value there. And I think that's a growing industry trend, right? If you look at hash rate in and of itself as valuable, it opens up the doors to a lot of different financial products that can be built around that. And also, maybe looking at mining in a different way when it comes to regulatory stuff. So I think that's a really important iteration. I mean, that fundamentally, what you're seeing along, just to kind of touch back on a lot of kind of the meta market trends, is you're seeing like, look, the network self upgrades based on economic pressures imposed really by the most advanced miners. So if you've got the newest equipment, the lowest power rates, all the other operational efficiencies handled, you're basically the ones, and in scale for that matter, if for example there's a major difference in the asset price valuation, you're the last ones on. And so the network difficulty is constantly changing, and it's just brilliant how that economic equilibrium helped along by these algorithmically programmed events such as halvenings, right? Or halvings for that matter. That's just kind of a brilliant equilibrium that's created in this space. But yeah, I mean, you either have resellers or you have manufacturers, and it's an open market, right? They are going to sell based on the production capacity of those equipment, as they should, right? And so that's what you're seeing right now. And yeah, it's a lot of the major mining players, both globally as well as in North America, saw what is happening right now coming well before, and put in machine orders well before. It's one of those first mover type advantages, and betting on it. I like to think of it as a wave. I've expressed this on LinkedIn before, but if you're surfing, right, before you even feel that undertow, you need to start paddling. The first, the unwritten rule is the first surfer that gets the wave, it's their wave, right? You're not going to drop in on someone else who's already riding that wave. So there have been, $100+ million bets that were made way before asset price went kind of up this year. And that was, and now they look like geniuses, but really, if you just kind of do the math out right, this is a digital and scarce asset that is out there. And that's fundamentally different than a lot of what we've seen. And if you look at really kind of the meta market, that is being gobbled up rather quickly. And so the production side, I mean, a lot of those people made really, really serious bets on mining this year, early, even last year, and they're reaping the rewards now.
That leads me to talking about Bitcoin price, the recent bull run, and the miner revenue outlook. And I want to start off by what you just mentioned makes me think that miners should be hodling, right? In most cases, and how are miner behaviors about to change in this current market when there's this interplay between miners and the mining industry and the financial institutions who are looking for basically numbers and profits and ROI and returns. So today you're looking at this. Miners in most cases sell their Bitcoin in order to cover operational expenses where they cannot pay in Bitcoin, so they need fiat. So how is HODL behavior going to change for miners? And this is something I'm very curious about, and I'm sure you may have some outlook or perspective on that based on the miners you deal with.
I first want to say I think there's like a mischaracterization of hodlers in this space, right? When you look at Bitcoiners, and when you look at the Bitcoin space in particular, as well as crypto, right? Hodling is participation in the market. It's just a different type of participation. So to clear that up, I mean, you look at kind of some of these metrics and you understand, look, this is a really good indication of where people think a digital scarce asset like Bitcoin, right, with a 21 million hard cap at the top, is going. And I think that's really fundamentally important to understand kind of where miners place themselves and what the dominant thinking is, right? Um, Especially with regards to institutional funds coming in, there's a lot more, I guess, focus on the underlying asset, right?
Mm-hmm.
If you look at mining, there's two real schools of thought. One, this is a really good way for me to make a bunch of money in US dollars or whatever your fiat system is that you're participating in. Again, this is global.
Yeah.
Excuse me.
Bless.
And the other side of it is, okay, how can I get exposure to an asset at lower than market price, as we've talked about,
Mm-hmm.
on the session here? And I think that, as you see it now, is becoming a more dominant school of thought, but it has not always been that way, and that's very important. And most mining operations, yes, are still selling some, if not all, to cover costs. Obviously, that's changing.
Mm-hmm.
Um, but I mean, really, what you're looking at here is, as at Binance Pool, we're not in the business of speculating on price. We provide a service. We're user focused. We are fundamentally looking to build out this industry with our miners in mind. But there are a couple of factors that are driving this bull run that I think we should touch on. One of which is also kind of spurred on by a lot of what we do at Binance Pool, as well as many other players. This is not just us. I just think we do it very well, which is that fundamentally what's different about this bull run, in my opinion, and that goes back to that comment on hodling, is that before, to recognize value in the stack, so to speak, miners generally needed to sell their Bitcoin, right? So there's a lot more sell pressure on the market, right? Whether it's OTC, whether it's off market, completely, like peer to peer, or for example, whether it's just on open markets, such as an exchange. There's a lot more sell pressure because they need to pay for costs. Realize that now there's such a huge product stack, especially stuff that we've developed, where miners can make 5, 10, sometimes even 20% just by using staking, adding interest. I mean, all of these types of different things. And so there's value in the stack beyond just selling the asset, right? In which case, there's also kind of the scarcity coming into the play there, right? When we look at it, where it's like, okay, there's actually less being sold because there's other ways to monetize your crypto. And so for our miners, I think fundamentally what we focus on, and why we're different, is that we don't need to take the same kind of service fees, right? If you're a miner and you're making Bitcoin or Ethereum, for that matter, and you're in the current market, generally speaking, you're going to want to retain as much of that as possible. So when we're running promotions like we have for 0% pool fees for several months now, right? We see a gigantic growth in our underlying hash rate, because miners open their eyes and say, okay, I can retain more of the thing that's valuable here. And then you double down on that by saying, and you can help us by providing liquidity, but we're going to give you just excellent one-click interest type deals.
Mm-hmm.
And so that's a fundamental driving factor now, is those two things, right? That's fundamentally what an exchange mining pool does, and why we have an advantage over traditional mining pools that are just charging fees. You can really stack value on top of that.
Mm-hmm.
Our VIP miners, right, like miners in scale with us, and basically have also all their VIP rights from the exchange carry over to the mining pool and vice versa. So all these things like margin borrow, futures, etc., are much cheaper if you're a miner with us. So these are, fundamentally a different way of looking at the value stack, and I think that's becoming really, really important, especially as asset price valuation goes up. And so
ultimately,
that's really
yep. It's mining Bitcoin is one thing, but what you do with your Bitcoin is another, and that is what would eventually make the difference in your mining business on the long term.
And yeah, and the meta market, I mean, you're looking at, this is no secret. You look at exchanges, you look at OTC, and what you're seeing is liquidity concerns, right?
Mm-hmm.
with this hodl behavior, with an asset price valuation going up, it's almost a self-fulfilling prophecy, because if you have a bunch of people that have this mentality of, okay, this may go up much farther, there's less people willing to sell. And especially when you're dealing with some of the smarter people in the industry in terms of miners, right? They've run the data analytics for every price valuation, right? They know what's happening. This is not 2017 anymore, where it's rack and stack, pray to God that, that we stay above a certain price point. This is very, very mature, professional business people and funds coming into this, really to gain exposure on a different level than just buying it on the open market. And you see that too, right? There's no shortage of people that are buying it on the open market. If you're selling your Bitcoin right now, there's someone that's going to buy it. But fundamentally, as a miner, you're in a really good position right now. It is a very lucrative business to be in, but even more so because there's so many, as we go back to kind of the whole conversation here, there's so many stranded and or underutilized energy providers, right? It just makes sense, right? So if you get your hands on machines, it's a very exciting time to be in mining, especially working through it, 2017 through 2018, crypto winter, 2019, where there's not much going on.
You saw the industry go from literally from 0 to 1. So that's really interesting.
Yeah, and it's fascinating to be part of that. I think we all are doing our part in this is the production center, right? Miners are the ground floor of crypto. It's what brings it value too, right? And it's really exciting to be working with really, really smart people in a space that is kind of booming right now. It had gone quiet in a way for a long time, and now we're starting to see it pick up and starting to really be able to iterate on the products that we're delivering to these miners. And I think that's really exciting for the industry.
It's maturing really, really quick, and that's very interesting to see. And will be very interesting to see what would happen between now and the end of the quarter. Of course. We're all on the edge of our seats and all buckled up and ready to go. There you have it, Jesse Phillips, drilling into crypto. Thank you for being with us today. Amazing insight, and we look forward to chatting with you very soon.
Absolutely. Thank you for what you're doing in the space. Really appreciate being on here, and I'm glad to just share some insight, because this is a really cool sector to be in. I think, all of us are doing really cool things, and on behalf of myself and Binance Pool as well, I really want to thank you for your time and bringing us on today. Honored. So thank you so much.
It's our honor, Jesse. Thank you.
Thank you.
Thanks for drilling into crypto with us. If you enjoyed our discussion, please give us a like on your podcast app or social media, and don't forget to subscribe. Join us next time when we will deliver more perspectives on crypto asset mining, energy markets, and the global financial revolution.